Hey everybody, J.D. Holt here with Alabama Teachers Investment Services located in Gadsden, Alabama. Today, as promised, we're doing our second part of the election preview with the re-election of President Trump, looking at the upsides and the risks associated with that. So let's discuss taxes with the second-term Trump administration. With the Tax Cut and Jobs Act of 2017, the Trump administration lowered corporate tax rates on small businesses, as well as individual taxpayers' rates, which obviously had a positive impact on consumer spending, corporate profits, as well as helping support the markets. We expect to see more of these types of policies with a second-term Trump administration. So from a business tax standpoint, a second Trump administration likely would continue to promote a business-friendly, low-tax environment, allowing businesses some leeway to get back on their feet after the impacts of COVID. This is true for small businesses in particular. They may not be in the S&P 500, but they are still the heart and soul of the U.S. economy. Another item affecting businesses is Trump's agenda to end U.S. reliance on China. This includes a bid to use tax credits, which are credits for companies that bring jobs back to the U.S. He's also looking at expanding opportunity zones, which were created as part of the Tax Cut and Jobs Act of 2017. Opportunity zones are designed to bring investments to economically distressed parts of the U.S. through capital gains taxes. So what else can we expect from Trump's second term? Let's discuss deregulation. As stated in the first series, deregulation has been a priority for the Trump administration, particularly in the financial sectors and the energy sector, and one that we fully expect to continue in a potential second term. How about implications on small businesses? Increased regulation tends to be more damaging for small businesses than large businesses. In fact, large businesses can sometimes benefit from regulation because of their ability to scale during regulatory times. So let's discuss immigration policy. This has been an area where the Trump administration has increased regulatory costs, which are likely to continue in a second term. Stricter policies and enforcement have reduced labor flexibility for businesses and shrunk the available labor pool, especially for skilled labor. So a second term for President Donald Trump would likely feature a continuation of the pro-growth policies from the first term of his administration, and importantly for financial markets, a continuation of the status quo. Markets don't like uncertainty, and while Trump's negotiation style is a little unpredictable at times, his commitment to lower taxes and deregulation may provide a consistent, market-friendly policy environment. Let's look more closely at what a second term for Trump could mean for the economy and markets. So next is energy regulation. Support for energy companies and specifically fossil fuels appears to be an ongoing objective for Trump, and he has pledged to continue the deregulation agenda for energy independence under the aim of creating jobs. Most companies in this sector, excluding those in renewable energy, will likely benefit from a Trump victory. Now let's talk about jobs under a Trump second term. President Trump's number one point on his policy plans for his second term is to create 10 million new jobs in 10 months. In the post-COVID economy, this is likely to be a heavy lift, but it appears he is hoping to achieve this through some of the policies previously highlighted that are aimed at bringing jobs back to the U.S. Lastly, let's look at trade. Primary markets risk from Trump re-election comes from re-escalation of trade dispute with China. The Trump administration will likely continue to be tough on China and other primary trading partners, even with the divided Congress. This is an area where the president has a lot of power to implement policy changes. So in conclusion, our analysts suggest the 2020 presidential race will be close. If the economy continues to open up, there's more progress on a vaccine, and unprecedented stimulus continues to drive asset prices higher, Trump could surprise the pollsters again and stay in the White House. A weakening economy or stock market losses between now and Election Day would likely favor Joe Biden. Importantly, regardless of who's the ultimate declared winner, the markets historically have had no preference either way for one party or the other.